Let's be brutally honest for a moment. The world of currency trading, for most, is a symphony of the predictable, the gentle, tedious ebb and flow of the US dollar, the euro, the Japanese yen. It's a game played on a well-lit board, with rules understood by all. But what if I told you that the most profound financial shifts, the ones that create millionaires and redefine global economics, never start in the spotlight? They begin in the shadows, in the hushed, frantic corridors of Tier 1 banks and on the screens of the world's most connected liquidity providers. And right now, those shadows are screaming. For months, even years, the Iraqi Dinar and Vietnamese Dong have been the subjects of whispered hope and fervent speculation, often dismissed by the financial mainstream as fringe assets, a waiting game for the patient. But waiting implies stillness, and what we are witnessing right now is anything but still. This isn't speculation anymore. This is a seismic data event. We are tracking an unprecedented, almost violent, surge in global transactional volume for both the IQD and VND that cannot be explained by routine economic reports or regional trade. This isn't a blip, it's a tidal wave building deep under the ocean's surface, and the institutions with the deepest sensors, the very banks that form the bedrock of the global financial system, are the ones repositioning. They aren't doing this based on rumor, they are acting on cold, hard, monumental flows of capital. Think of the Forex market not as a single entity, but as a vast, global network of pipes. For years, the pipes carrying the dinar and dong were narrow, barely a trickle. Suddenly, and with no public announcement, those pipes have been supercharged. The volume of currency moving between major international banks, the foundational settlements that happen before any retail trader even places an order, has skyrocketed to levels that veteran analysts are calling anomalous and structurally significant. This is the kind of activity that precedes a fundamental repricing of an asset. It's the digital equivalent of seeing every major oil tanker in the world simultaneously changing course towards a single, previously quiet port. The question is why? The logical conclusion, the only one that fits this scale of coordinated, institutional movement, is that the foundational conditions for a revaluation are not just being discussed but are actively being prepared for in the operational back end of global finance. This is the plumbing of the financial world being overhauled in real time to handle a new, expected reality. It means the long-theorized catalysts, the Iraq currency reform measures, the international agreements to remove their Chapter VII restrictions, the nation's pivot away from a petrodollar economy, are no longer just political talking points. They are translating into actionable, financial motion. The computers at JP Morgan, Citi, and HSBC don't care about hope, they care about probability and flow. And their algorithms are screaming that the probability of a major currency event for the dinar and dong has just shifted from the theoretical to the imminent. This is the divergence between mainstream financial media, which reports on what has already happened, and the razor's edge of institutional activity, which bets on what will happen. While CNN and Bloomberg are silent, the real players are making their moves. They are building massive, strategic positions in these currencies, not for a short-term flip, but for a fundamental, paradigm-shifting change in value. The surge in volume is the smoke, and the institutional activity is the heat. You don't need to see the fire to know it's there. And if you're watching this, you are now ahead of the curve. You have been given a signal, a glimpse into the engine room of global finance. This is the intelligence that was previously reserved for the 1%. But before you make any move, you must understand the full scope of what this means, the geopolitical dominoes that are falling right now to make this not just possible, but inevitable. Stick with me, because in the next segment, we will connect these financial tremors directly to the political and economic decisions being locked in place in Baghdad and Hanoi, decisions that create a one-way path for the value of these currencies. This is not a drill. So the data is clear. The machines are trading, the volume is exploding, but the critical, undeniable truth that transforms this from a market anomaly into an inevitable financial event lies in the geopolitical landscape. The surge we are tracking is not happening in a vacuum. It is the direct, real-time financial echo of a series of profound and deliberate political victories finally being secured on the ground in Iraq and in the economic war rooms of Vietnam. Let's start with Baghdad. For decades, the value of the Iraqi dinar was shackled, not just by war or instability, but by the stringent, suffocating restrictions of Chapter VII of the UN Charter. This was more than a political designation. It was an economic stranglehold, a label that legally defined Iraq as a threat to international peace and security, systematically crippling its ability to engage in normal global commerce and access international financial markets on its own terms. It was the primary barrier, the legal wall that prevented the dinar's true value from being recognized. But that wall has now been demolished. The official release from Chapter VII sanctions is not a future promise. It is a present-day reality. This single act has unlocked Iraq's economic sovereignty, allowing it to freely negotiate trade deals, settle international debts in its own currency, and, most critically, begin the process of having the Iraqi dinar recognized as a globally traded, stable currency, no longer tainted by the stigma of international pariah status. This is the bedrock upon which a revaluation is built. Simultaneously, the Iraqi government has been executing a masterful, multi-pronged monetary reform strategy with relentless precision. The issuance of new currency notes, a move often misunderstood by the public, is not merely about changing the look of the money. It is a surgical strike against corruption and the massive volumes of counterfeit currency that have plagued the economy for years. This replacement of the physical currency supply is a cleansing of the financial system, a necessary precursor to establishing a strong, trustworthy, and transparent monetary base. Furthermore, the Central Bank of Iraq has been aggressively pursuing a policy of de-dollarization, systematically weaning the domestic economy off its dependency on the US dollar for internal transactions. This is a monumental shift in financial policy, a declaration of economic independence designed to bolster the demand for and the inherent value of the dinar itself. Every internal transaction that moves from the greenback to the dinar strengthens its foundation, creating a self-sustaining ecosystem of value. Now, pivot with me to Vietnam, because the story there is just as compelling and structurally synergistic. The Vietnamese Dong is riding a wave of economic momentum that most nations can only dream of. We are witnessing a historic, mass exodus of manufacturing and technology supply chains out of China, a phenomenon known as the China Plus One strategy, and Vietnam is the undisputed primary beneficiary. Giants like Samsung, Apple, and Intel are not just opening small factories. They are transplanting entire industrial ecosystems into the country, bringing with them billions of dollars in foreign direct investment. This isn't speculative capital. It is concrete, long-term investment in physical infrastructure and human capital. This massive influx of capital creates a powerful, organic upward pressure on the Dong. To facilitate this boom, the State Bank of Vietnam has been strategically and cautiously allowing for a more flexible exchange rate, a move praised by the International Monetary Fund. They are carefully managing the currency to avoid overheating, but the underlying trajectory, driven by sheer economic firepower, is decisively upward. The economic growth figures coming out of Vietnam are not just numbers on a page. They are a testament to a nation transforming into a global economic powerhouse in real time. So, when you connect the dots, the picture becomes unmistakably clear. The unprecedented trading volume in the IQD and VND is the smart money front-running these tectonic geopolitical and economic shifts. The institutions aren't guessing. They are reacting to the completed political groundwork in Iraq and the undeniable economic explosion in Vietnam. They see a nation unshackled from its past and another rocketing towards its future, and they are positioning themselves for the moment the rest of the world wakes up to this new reality. This is the convergence of political will and economic law, and it creates a one-way trajectory for these currencies. But understanding the why is only half the battle. The crucial, final piece is knowing exactly how this will unfold and what you need to do, right now, to be prepared. Don't go anywhere, because what I'm about to share in the final segment is the most critical information you will hear today. We have navigated the data and decoded the geopolitical catalysts, which brings us to the most critical moment of all, the present, the precipice upon which we now stand, and the decisive actions you must take to ensure you are not a spectator, but a participant in what is unfolding. The convergence of institutional trading volume and solidified political will create a very specific, predictable sequence of events, a domino effect that leads to a single, inevitable conclusion, a public revaluation. Think of this process in 3 distinct phases, and understand that we are currently in the late stages of the first. Phase 1 is the accumulation and settlement phase, which is what this massive volume surge represents. This is the period where the largest financial entities, the prime banks and sovereign wealth funds, are establishing their core positions at the current, artificially low rates. They are building their war chests, settling the enormous logistical backend required to process a new global currency, and essentially setting the stage. This phase is characterized by high volume but minimal public information. It's the calm before the storm. Phase 2 is the catalyst event. This will be a public, official announcement. It could come from the International Monetary Fund formally recognizing Iraq's compliance with all financial benchmarks. It could be a joint statement from the Central Bank of Iraq and the US Treasury confirming a new, fixed exchange rate. For Vietnam, it could be an official upgrade from a frontier market to an emerging market by a major global index like MSCI, triggering a flood of mandated investment. This announcement will be the spark, the moment the underlying reality that we've been discussing is formally acknowledged by a legitimate, unimpeachable global authority. It is this event that will shatter the current paradigm overnight. Then comes Phase 3, the global repricing. The second that official announcement hits the news wires, every single Forex trading platform, every bank, every international airport currency exchange kiosk on the planet will be forced to halt trading on the IQD and VND. Their systems will be taken offline for a critical update. When they come back online, it will be with a new, vastly higher, and officially sanctioned exchange rate. This isn't a speculative pump, it's a formal, global reset. The window of opportunity we have now, today, exists only in this narrow sliver of time at the tail end of Phase 1. The moment that Phase 2 catalyst hits, the game is over. The door slams shut. The opportunity to acquire these currencies at their current pre-RV valuations vanishes forever. This is why the urgency is not manufactured, it is mathematical. It is the simple, logical consequence of the data we have already reviewed. So, what does this mean for you right now? Your action plan must be clear, precise, and executed with conviction. First, education is your armor. You must immerse yourself in the specific, practical mechanics of how to safely and legally acquire these currencies from reputable, established dealers. Avoid get-rich-quick schemes and unverified sources. This is a serious financial undertaking. Second, position yourself strategically. Based on your own financial circumstances and risk tolerance, establish a meaningful position. This is not about betting the farm. It is about making a calculated, informed decision to allocate resources towards a historically asymmetric opportunity, one where the potential upside is monumental and the current cost of entry is still accessible. And third, and most importantly, you must cultivate a mindset of resolute patience. The final hours before a transition of this magnitude can be filled with volatility, rumors, and attempts by the old financial guard to create fear, uncertainty, and doubt. You must be prepared to hold steady. You have now seen the evidence that transcends rumor, the institutional volume, the completed geopolitical groundwork, the inevitable sequence of events. You are now operating from a position of knowledge, not hope. You have been given the key. The question is, will you use it? This is your call to action. This is your moment. Do not let the silence of the mainstream media lull you into inaction. They will report on the revaluation the day after it happens, when it is far too late for you to participate. You have the intelligence now. The path is clear. The responsibility for your financial future, at this pivotal juncture, rests solely with you. Make the decision. Secure your position. Get ready. The world is about to change, and you have a front row seat.